let's take her back and talk a little bit about Eidelman Virant and the origin of Eidelman Virant and kind of how you guys, or how David, how you started the company and um, the origin story.
Well, I was always a fanatic stock market player, even in college. And so I started out as a stockbroker with a few New York Stock Exchange firms and ran the research department. And I always wanted to start my own firm. So in September 1982, I started a company which at that time was called Eidelman Capital Management.
Okay.
And I started with my a partner, Stan Finger, who was a friend of mine. And that's when we started. So from 1982, it's 40 years we've been in business.
That's incredible. When you started out with the vision, kind of what was your target market, and has it changed over the years, or is it still kind of the same?
When I first started, obviously your first goal is just to make a living. And so I had some clients that I had when I was a stockbroker, so I converted to a registered investment advisor.
Okay.
So I had enough to make a living, and then my goal was to build up my own account, but also build up my clients' accounts.
Maybe I'll ask you, just because I think it's interesting nowadays, when you go to financial advisors, they do asset allocation and have a lot of different funds and talk about your goals. What were you kind of thinking for your clients? What was like your offering and what you were trying to deliver at that time when you first started?
That's a very good point, because nowadays people are really into financial planning, estate planning, and that sort of thing. At that time, and really even now, I was always focused on, I want to make money in the stock market. I want to be the best analyst in analyzing stocks to figure out what is the best methodology of making a good return without taking too much risk. So I've always been focused on research and making money in the stock market, and as for my clients and myself. So I always use myself as a client is my goal, whereas nowadays I think people are more interested in the long-term financial benefits and financial planning and estate planning.
Mm-hmm. And so you get started in 82, and the first, obviously Tom, he's probably not even,
Right, I'm 3 years old at this point.
He's just starting school. So, you and your one partner, what were the first, how hard were the first 5 years of business? Because I know that's kind of what we hear is the hardest part for most companies that start.
We got lucky in the beginning. We bought a couple of banks that got bought out and started off really well with some big gains. And so that can have its downside too, because you get overconfident. Yeah. And it was always a challenge to get clients just starting, but so we had to depend upon word of mouth and develop sources of good ideas and good stock ideas.
How much of your time was spent kind of acquiring new clients or like educating clients?
Well, I'd say a fair amount of time was spent just learning all the regulatory things you have to do. We had, not long after we started, the SEC came and did a surprise audit. And that is always a scary, unforgettable experience. And, the bookkeeping, learning how to type up their portfolios every month, so to explain to them. And it was important to us to tell our clients our methodology, which I think was a little bit different than what some of our competition was doing. And So we always like to have them come in and talk to them and let them know exactly what our approach is and what makes us unique.
Can I ask you what were you able to make a living pretty quick into the business, and how worried were you about kind of keeping it going at that time?
I was always worried, and I had just enough to pay our bills, not enough to really to save anything. The goal was over time to get to grow and get enough clients, and then like every few years a bear market would happen, and it's normal. You get it. There's always a client or two that say, David, you're a nice guy. I really like you. I trust you, but we're going to go in a different direction. So, the assets under management between the stock market fluctuating and clients wanting to try something else, you have good years and bad years. And there were years where, barely I was supporting my family. Was always worried about that, especially as Tom and Amy, my kids, get older and closer to college. I realized somewhere or another I got to generate a lot of money.
Well, yeah, they're definitely not cheap. Right?
No.
Yeah, I love hearing like humble beginnings of companies. I mean, a lot of people I talk to, they don't have this grandiose intention of, making the biggest company in the world. They're just trying to provide for their family. And it's a similar story with my dad and my uncle. When I talked to them, sat them down in the podcast, I was like, hey, why'd you guys start the company? And my dad said, well, I just wanted enough money to buy a lawnmower, like, like a lawnmower. Oh my goodness. So I love hearing that kind of humble beginning of a story. So as you start to get some traction, obviously you guys have been in business 40 years. So you've obviously can provide for the family more now, like 10, 15 years in here. What was that journey like, I guess, after the first 10 years, the first decade under your belt?
I always thought that we could grow and become a much more substantial company, but it took a while. But the big breakthrough was we had a couple of clients that were substantial, and we did really well for them, and then they added more money, and so that was really our big breakthrough.
Just proven results.
Right. That really helped. We did really well for our two largest clients, and we kept them for a long time. That was one of the things we were most proud of. When you keep a client in the money management business for 20 years, it's good because number one, they grow, and through the increase in the market, and also, sometimes they decide to add more money.
How's the team look differently from the beginning to managing that kind of money?
Well, in the beginning, it was just myself and Stan Finger, and I'd always wanted to recruit Tom because I knew he was smart and kind of good at figuring out odds and gambling, and was intellectually interested in how you make money also. Mm-hmm. So when Tom went to Microsoft as his first job, I was always trying to recruit him. In fact, he worked for me a couple of summers and did a lot of good research and came up with some interesting approaches and findings in some tests we were doing. And then when we merged with John Virant, that more than doubled our assets under management. And that's really what helped us get up to where we are right now.
Gotcha. So your dad's trying to recruit you. You're working for Microsoft. So obviously that's kind of like the first part where you're thinking about maybe joining. Tell us a little bit about that.
Yeah, it is interesting. I would say he sort of alluded to it. I think there was always this this thought that I could join the business, or that he wanted me in the business. I felt it at a very young age. We talk about investing at the table, there was this story that somebody said, I remember my mom told the story that like the father wanted their son to be a lawyer like him. And they said, well, do you enjoy it? And he says, no. You know, do you come home for dinner? No. Well, why do you think the son didn't get in the business? He sees you're miserable. So I think it's an interesting story because I was the exact opposite. I saw a dad who was always home, always coached my baseball games, was always happy and loved what he did. Mm-hmm. And if you want your child to go into your business, there's no better way than to just show that you love it and that this is a business to be that you want to be in. So that's, I'd say, the number one thing he did was nothing he said. It was what he did. I was telling Dave, the other funny thing is partner Stan Finger, who still works with us today, his original partner is still here. He, at a young age, would call me boss. You know, he'd coach my like, make it up, I'm fifth grade softball team, and they'd coach it together, and he'd call me boss, which I always thought was funny. And then it ironically ended up, I think he still calls me boss. Obviously, it's as a joke, but we have a great relationship.
And there were times when Tom was in business school. I remember we had the market crashed, and I was under a lot of stress. And I said, Tom, would you like to go in our business? And Tom's going, this business is too hard. I don't think I want to go into it.
Oh yeah, definitely a tough business for sure. I mean, investing people's money, and you can't control the market. You can only control risk. And like, so what drew you kind of to that, Tom, as opposed
to? So I went to Indiana University and double majored in finance because I was interested in it, and computer information systems, which at the time, and probably still is today, everyone was computers and software is the future. All the jobs at Indiana, I mean, Anderson, all these consulting firms and technology firms and Microsoft were recruiting there. And so got an internship at Microsoft, went out to Redmond, Washington, had an amazing experience. They hired me back full time. Interestingly, A.G. Edwards here in St. Louis has an investment banking, which I was also interested in. I interviewed, they gave me a job offer. It was between them and Microsoft. I went to Microsoft. And what started this whole thing is they called me a year later, and they didn't give up on me. A.G. Edwards said, will you come back to St. Louis? You know, we had somebody quit. I was really thinking about it. And that's where David kind of jumped on and said, well, if you're thinking about coming back to St. Louis, you're not working for A.G. Edwards, you know. And so we kind of decided that it made sense for me to join, and that's where we get into. My wife plays into this too. She was trying to get into residency. I dated my high school sweetheart, and we dated all the way through and got married. And so we had dated for 11 straight years before even getting married. Okay. And so we both wanted to move back to St. Louis, and so that played into it too. The greatest thing, which we'll get into about joining so I did decide to join. And I would say that the state of the business at that time, David has sort of built up a nice book of business, built up his net worth, and he didn't need necessarily to work, but he kind of built what I'll call a business by accident. He was like, well, do I keep this business? Like, if you want to join, and I think we could take this to the next level together, or you don't have to, I'll just maybe retire, manage my own money, but I think we could make something of this. And so it was just a unique opportunity to get, for me, like essentially to come in at 25, and sort of have that kind of level of responsibility. Just a combination of entrepreneurial, because we were still small enough. Maybe we were 70 million under management.
What year was that?
2004.
2004.
Yeah.
Okay. What was your role then when you started?
Yeah. So David said, which, I'm sure you remember, and he still says it today. He says, you do whatever you think is best. This is how I've managed money. By the way, we haven't gone into it, but basically we're individual stock pickers. He said things that have a lot of upside with not a lot of downside. Things like small regional banks, bonds with a lot of assets backing it up, or maybe good quality companies that are just consistently growing. And he said, we have a good record. We've had good years and bad years, but I'm open to changing. If you want to do this index fund thing, we could talk about that. And I spent maybe the first year or two, and the truth was his results were just outstanding. I mean, we're talking top 1%. I'm going, why would we do anything different? I think we just need to kind of more what we call institutionalize this, get more analysts, get our performance results audited so that people, and maybe try to, get our marketing all polished. I think we could just do what you've been doing and grow this thing.
Yeah, it's a definitely an interesting strategy you guys have because everybody seems to be like index funds, spread everything out, and you're kind of putting yourself, in front of the firing squad a little more, and I think that's pretty awesome.
That's really right.
That's absolutely right.
But the results can be a lot better that way. But you're putting yourself on the line, which is pretty awesome. So
Right. When Tom came, if we wanted to build into, a big money management firm, I wasn't sure that the method that I was using, buying small regional banks in special situations, was that expandable. So over time, as we've grown and had more assets, we've sort of evolved. And I told Tom, to me, the advantage of having Tom in the business, you've got a younger person who's really up on all the latest technology and so forth. And so we can figure out what do we have to do if we really wanted to grow as a money management firm, as opposed to kind of focusing in on smaller special situations.
Mm-hmm. Yeah, I mean, I think like you alluded to at the beginning, like people now, like all the financial people I've talked to, they're all about getting you in, getting an index fund, setting you up on a, monthly payment. And it's not, you don't hear your guys' kind of strategy. So I think institutionalizing it, I mean, that was a really good idea on your part, Tom.
Well, it was, it was, and we had some success, but there's also, as we said, there's challenges in it too. So what we do is different. Realistically, we're mostly individual clients, people we know, people who heard a happy client mentions to another client, but because what we're doing was so unique to buy, like say 20 to 30 individual small cap companies, was less the norm. And so like you said, we always are going to have good years and bad years. Hopefully we do really well over time. But when you have a not so good year in this S&P 500 and everyone else is doing well and people look and go, why am I with these guys? What are they doing? That can be a challenge, right?
Right. But one interesting thing that I think Tom has really helped us develop, how we've changed, that we've become more and more interested in the concept of good corporate cultures for an investment. And I had visited a company when I was very young, that when I walked in, they had a sign that said member parking only. And I said, what's member parking? He says, well, we don't have like management and workers. We have a team. Everybody's the same. If you get here early, then you get a good parking place. And they referred to all their employees as teammates, and they took their profits and split them up every quarter to all their employees. And over time, I discovered that worked. And Tom sort of started reading all these management books about that concept. And so we've sort of had really good results by buying companies that make all their employees feel like they're owners, that are best places to work, that focus on return to the shareholders. So they have three good things: return to the shareholders, great employees that love working, and they want to make their customers love them. And so Tom has spent a lot of time reading books and researching that, and we've done the same thing and working. You might even want to mention about what we did with Washington University.
Right. So this is just, we're talking about how our investment philosophy has evolved over, as you could imagine, both because we got bigger and you like to think in life we're all growing and getting better at everything we do. David is like really an expert on what we call, what's more known in our industry as value investing. How do you find something off the beaten path that is priced so cheap and it should be higher? And that absolutely is a great way to invest. But we noticed that one thing that's undervalued and people don't, those are all in the numbers. How's the balance sheet? How's the earnings? And that's why people get CFAs and they can figure that out. What we kind of have noticed is the special sauce, the culture in a company, the management and the power of the team. And so, that's just something that we add to our process. So now actually, which we mentioned, so we spun out a division called Daytona Street, and that's really focusing on, one of the key elements is finding high quality companies we think can like triple over 10 years. And we have 4 things. I'll just run through them. Right. We want competitively advantaged business, a great culture, customers who love the product, and the value it's a good value that we think can say triple over 10 years.
Yeah, I mean, I like that a lot. I mean, company culture. I mean, obviously, owning a company, I like to have a good culture because it's good for the business. It's not just
Right.
good for the people. It's good for the numbers. It's good for so to take that as an investment strategy. I mean, that's also like a next level research too. Like you got to really get into the weeds
Right.
to figure that out.
And when Tom and I interview companies, very frequently the CEO says, boy, you know, most of the other analysts just ask us about all the numbers, but you guys really ask us a lot about, you know, how we motivate our employees and how we make our customers love us, which we love to talk about, but no one else asks us those kind of questions. So that makes us feel that we're on the right track and maybe have something a little bit unique.
When is the first time you kind of seen like a company culture? Like you mentioned, you went into that bank and seen their.
That was Han Industries, I think you're probably talking about.
Yeah, it was called Han Industries in Muscatine, Iowa. And they made metal office furniture, and all their competitors were struggling to make money, and they were earning a huge profit. And I said, you know, what do you guys do differently? What enables you? And they were saying, you know, it's all about our culture. It's about getting great people, and a lot of workers that may not be in the upper echelons of management. They observe things, and so they always are improving and making advances, because even the janitors sometimes can have an idea about how to do things better if you ask them. So that's why we like companies that every employee in the company has an incentive, maybe gets a percentage of the profits, no matter how low down in the company they are.
Southwest Airlines was always the most sort of classic example where they said, you know, you don't have to wear those stuffy outfits. You know, they hire cheerleaders. You know, they have a fantastic profit sharing program. I think 15% of all profits go to their employees, and they just change the way, you know, you run a business. Yeah.
So
and then all the pilots want to go and fly for Southwest.
So, I mean, obviously, family company culture is important. You're with family. And there could be like some nepotism in some family businesses, you know, favoring the family. So what are some, I'd like to dive into the culture thing just a little more for some people that are thinking about implementing it in their own company. So like you guys mentioned profit sharing. Is there any other things you see here and there in companies that are good staples of a company culture?
Yes, I think that one thing that Tom and I talked about was, okay, we look for a good culture in the companies we invest in, but we need to do that for us. We should be one of those companies. So I think that since we've observed that what causes success, again, to us, so we want to hire great people. So our personnel, we want people that are nice, smart, and we give all of our employees bonuses based on our profits also. And at times we let all our personnel at one time or another have owned stock in our company. And so we've done the best to make our company have that culture to where we get great people, incentivize them, and they all do feel like owners. You can just watch it, the way our secretaries and our assistants, they're looking out for us because they feel that they're also looking out for themselves.
I think it's important to find out kind of what everybody has a different motivator. One thing we've learned, or I've evolved, is David always you want to invest in companies that give a percentage of their profits to employees. That's it. I don't want to short, but say everybody's motivated by money. And one thing I actually learned working at Microsoft is that that's not true. People are motivated by different things. Recognition. Actually, the big thing at Microsoft was they get the best engineers because they have the best technology. So if you really want to motivate an engineer, a software engineer, you give them the latest software, the best supercomputers, and you know, they're happy.
Toys.
Yeah, you give them toys, and you give them hours. They'll love to like work till program till midnight and come in at 11. So you give the best toys and give them those hours and really cool work. That's what motivates them. I mean, yeah, I'm sure they want to make a good living.
Yeah.
So we try to find companies where they sometimes it's a higher social purpose. Maybe some people work at Tesla because it's cool technology. Some may care about saving the environment. So different people have with flexibility. So we do that too. We have some employees that we've actually were way more flexible. I remember you even had a secretary who you let her pick up her kids every day at 3. Like we were kind of ahead of our time. We don't need to have some corporate 9 to 5. We're just 10 people working in in an office building.
Right. It goes back to the what can we do to make our employees love us? And some of the great companies that we invest in, sort of like Tom said, in addition to money, they one company would have an employee of the month that did something good would get to go to a Cardinal game with the president of the company, or every company's got their own thing, but it's something that not only financially makes the employee feel good, but something that gives recognition and makes them really feel proud to be working for the company.
Yeah, and it's not a lot of companies have good culture, not yet. And a lot of people, they see the 15% profit share as a bad thing on the balance sheet or negative for the company, when really it might make you another 30% profit if you give 15% away. So if you're say you're an owner and you have a shoddy corporate culture now, or just a culture, it doesn't have to be corporate, what are some steps you guys think people can take now to like start improving that?
Tom, why don't you?
Yeah, I mean, there's a lot. I think he listed some. I think obviously if you can start with your financial incentive system, because sometimes that can get people right. So if you can give profit sharing, that's good. I know there's a lot of this personality testing. I mean, I think there's a lot to that. You'd be amazed how many companies whether there's a book, it's called the No Asshole Policy. There's a lot to that. People, you got to find out what your culture sort of stands for and whether people,
I'll give a good answer to what you can do. That's a good question. And to me, the best thing is to just become aware of it. And there's some excellent books on the subject. And so some of the companies that we interview that we think have a good culture, often they'll say, well, did you read this book? And in other words, they're intellectually interested in the whole concept of, as a company, what do we need to do to have a great culture? And then you learn about it, you become aware of it. And maybe a lot of people, it never occurs to them how important it is for all the people that work in their company to feel like they're owners, and that how important it is for their employee to feel like an owner and to really buy into the whole concept of having a great corporate culture, having people that are nice and smart and know how to bend over backwards to make their customers love them. And we hear stories all the time about how someone on a weekend will run out and deliver a product that they need and do things that are way above and beyond the call of duty because it becomes part of the DNA of the company. So to answer your question, I think the main thing is become aware of how important culture is and learn about it. Start reading books, and all of a sudden you'll get it.
Yeah, I'll add, I think the book was called Prime to Perform, but they kind of said there's 3 motivators. There's you intrinsically love what you do. So if you're engineering company, you hire engineers that love engineering. 2, it's the broader purpose. Back to you work for Tesla because you're helping the environment, or you like kind of the end, or you're a nurse. It might be a tough job, but you're helping people. And then lastly is it gets you where you want to go. So if you want to be a hedge fund manager, you take that investment banking job and it gets you where you want to go. So those are the 3 things that motivate people. So then that goes back to person. Now you got to make sure you hire that right person, and they can be smart. But if they're not interested in any of those things, you really want people who inherently love what they do.
Well, yeah, and like you guys are talking about flexibility, so letting someone go pick their kid up. I mean, it's such an easy thing, if they do their job, the end result is always there. what's the big deal if they have to leave early? That's how I look at it, you know. And they're a loyal employee, but like some people, you got to be here till 4, even if you have nothing to do for a half hour. It's like, what? You know. So I think it's super important. It's something that we're trying to do at Technogriffy, and you guys are doing, you know. And it's I like that you use that as an investment, you know, research tool.
Yes.
That's a good differentiator for the companies. So let's get into a little bit about how you guys work together, and you know, have you always worked on the same part of the business, or have you kind of been doing different things, like one doing customer acquisition, one doing research, or how's that been over the years?
Yeah, I'll start now, Heavy. I would say we're unique in that we've really worked together kind of on the same thing. We haven't split and said, you do research, I do this. We've worked together. I got to really learn. He likes to say, he's taught me everything he knows, but I like to think I know a lot of what he knows because we've been in so many management meetings. Sometimes we're asked the same questions at the same time. And we just get along. We've actually, we were joking, we essentially have never had a fight, not that we don't disagree on something, but it's a very rational disagreement. David is just like one of the nicest, kindest people that not only I know, but everyone knows. So he's just really good to work with, which makes it, I have no problem kind of approaching him with any problem. So we're kind of lucky that we have this just great relationship, and we do pretty much the same thing.
But I'd say lately, our business has evolved, that we have switched a little bit. That I focus more on small regional banks and kind of special situations, and occasionally I'll buy a kind of a down and out company that's got problems, but maybe has new management that's going to come in and instill a culture. And I think Tom, through Daytona Street, is trying to focus on great companies with great culture, like you mentioned, maybe larger cap companies. And so, sort of for the first time, we have a little bit different specialization, and plus Tom also has taken over more responsibilities about from regulatory situations, dealing with the SEC, and all that has gone smoothly. Tom is more detail oriented than I am. I think the SEC with Tom, everything was good. With me, they're going, you don't, next time do this, and you got to start doing that.
Yeah, I would definitely pass that responsibility off pretty quick as well.
So I'm happy to have Tom do that. That was not, details is not one of my strengths.
What has been, I guess, some evolving relationship aspects? Like you guys, so one thing I always ask is, how do you keep the family aspect of business, even though you're working together and you're trying to make the company money? Is there things you guys do like outside of work together that you think helps the relationship, or like the families all get together and stuff like that?
He's my dad, so we get together so much socially. Whether we go to, we mentioned we went to a Cardinal fantasy camp, played in a fantasy camp together.
Right. I think, in answer to your question, luckily, which I think is unusual, Tom and I live in the same neighborhood. Their kids sometimes can walk over to our house, or we can walk over to their house. And so, Tom went to the same grade school and high school that I went to, and now his kids go to the same grade school and will go to the same high school. So, so for those reasons, and the fact that we all love each other, that we're very close outside of the business as well as inside the business.
Yeah, real tight knit then. All live in the same area.
Yeah, I don't know if there's anything you can say that's like, how do you have a better relationship with your dad? That's beyond the scope of this. We have, right, business aside, we have always had a great relationship. And it's, obviously we've just gotten to know each other a bit better through business. I don't know if you were asking this question. Certainly one. If you say what's challenging about a family business, it's ironically not anything with me and David. It's probably that you have, and I'll just say they're challenges. We've had two different uncles. Both of his brothers have worked here at a certain time. My sister has worked here, so those are always just bring in a new angle that needs to be dealt with because we probably view things differently, the responsibilities differently. So those have been things that we just have to. Oh, and then I should mention, of course, and this is probably something every family business has, is my mom. So his wife and my mom plays a very, as you can imagine, critical role. She loves me, wants the best for me, loves David, wants the best for him, and she meddles. And it's we were just. I actually think it's been really helpful. I mean, sometimes maybe there's something that needs to be said or done, and she'll kind of go through the bullshit and say, you need to talk to him about this. You better take care of him on this issue. And
So is she more your advocate then?
I'd be curious. I really think she wants what's best for all of us. I do. I think if she's really good at what she does, I think she has us all thinking she's our advocate.
Right.
She's on our team. David's going, she's on my side. I'm saying she's on my side.
No, right. She'll tell Tom, I don't think you should do this. You got to do that, and vice versa. Sometimes she'll tell me, I've got to do this and I've got to do that. My wife is very aware of everything that's going on, and I think she takes kind of a hard-nosed look at things.
My mom's the same way. She's involved like that way. She's not involved in the business, but she's involved in telling me and my dad, some things like that.
On that point, I'll just add, so we merged with the Virants, who've been really good partners. It's another father-son team. And their mother, Mary Ann, who has no investment, is just a phenomenal human being, extremely well-loved. And she's been a critical. I've even talked to her when there's been issues. I go, maybe I should talk to Mary Ann, and she's been really helpful. So these wives and mothers can be critical secret players in family businesses.
Yeah. Like secret architects, visionaries behind the scenes. So let's touch on the extended family a little more. So, working a lot together, you guys have kids and other siblings, right? So how does them relationships been affected by the family company, and like you said at the beginning, if you come home and you hate your job, your son or daughter, she's not going to want to work, where you're working because you hate it. So what are some things that you think about in that regard, and then how has the other families and stuff been in relation to the business?
I'll start by I'll keep it kind of general because I don't want to go too much into some details. Other than again, I say one, David. Everybody likes David, realize how happy he is. So it's no secret that it's attracted both brothers who want to work with him, want to do investment business, and even my sister. So I think the important part is in any business, of course, is to hold people to a right standard. Obviously, back to nepotism, you want to make sure they're qualified for the job, are willing to put in the reasonable amount of work and output, and kind of have everything really set and kind of written what needs to be done and what's expected out of them, and that everybody's on the same page.
That's awesome. Yeah, I mean, because once you bring in, I guess, like father son, to me that's a better, less variable relationship. I guess maybe it's not, I don't know, but like working with my dad, I know we kind of know what to expect out of each other all the time. And then once you bring in extended family, sometimes it can get, a little messy. And luckily I work with my three cousins, but we grew up literally across the road from each other. So it's like, we're kind of like siblings almost, because we hung out every day in the summer and things like that. But I see other family businesses I talked to, and I mean, everybody sees it. It gets messy. I know, like Sheetz, the gas station, they have like 25, 30 family members that work together, and I was like, oh my goodness, that's a crazy amount of people together.
Luckily, in our family, everybody is honest and has good faith, so you never have to worry about somebody doing something in an unethical manner. and you have their back and they have your back, and so that's a great thing. I think in a family business, you just couldn't duplicate the kind of relationship I think that Tom and I have, where you have complete confidence in the other person and you know at all times they have your best interest at heart.
So Tom, you were in a group called SOBs. Let's talk a little bit about that because I thought it's an interesting, group that you were in, and you were in it for a decade.
Yep.
So how did tell us a little bit about what that group is?
Yeah, so I was saying I'm 43 now. When I was 20, when I first moved back to St. Louis to join the business, I had a friend who decided to put together this group where 8 to 10 of us, we were all in that 25-year-old range, joining a family business. And so we created this networking group. We met once a month called Sons of Bosses, SOBs, which is a funny name, which we all liked. And we were all in different businesses, and some were huge businesses, and they were starting at the bottom, like, the employee number 10,000 and working. And I was maybe on the other end with the smallest business, but maybe with the highest position coming in, because I was already sort of even at the beginning thought of as a leader. And I was just saying that it's amazing how many different things I saw. A couple of those businesses went out of business. Some grew really successful. Some, had a falling out with their father, and the father left the business. The father kicked the son out of the business. And I would say the big thing that I noticed is, I saw was the kind of the father being kind of the alpha and wanting to do it their way and kind of not letting the son get as much responsibility. Of course, that's the perspective I was hearing from all the sons. Whereas David and I had just a special, was the exact opposite. I mean, David from day one was like, what do you think we should do? You take over the company. It was almost too much responsibility too fast. And he gave me ownership right away. So it was unique in that way and great for us.
Yeah, I think that's an important thing when like an older family member, a dad in this aspect, doesn't want to give up control or responsibility. It definitely leaves the younger person just feeling like they don't have the ability to make decisions, or they're just an employee, and like there's no pathway forward maybe. And you see that a lot, and that's something my dad did too. Is I just got dumped responsibility on me as well, which was great to learn the business really fast. Obviously, fast tracked because I had no choice.
Right.
So.
Well, and I thought, if Tom made some decisions that I didn't necessarily agree with, I always thought it's important for him to have experience in seeing what works and what doesn't work, because who knows, maybe he was right. Sometimes he was right, and other times he wasn't. But you only learn by implementing what you think is right and seeing what works and what doesn't work. And I thought that if I'm constantly saying, no, you're wrong, we have to do this, that it wouldn't be bad for the long-term development of the company.
Yeah. Well, and then also when you would have been wrong, he'd have been on you. Like, Dad, I told you I was right.
Right. That's exactly right.
So we'll wrap it up here. One thing I do like to ask every guest is, what is the number one best thing that is, from working in a family business? What's the best thing about working in a family business? And then what has been the most challenging thing about working in a family business?
I'll start. The best thing, the bottom line is, I really think I never could have gotten such a great job, such responsibility with so much upside and equity and ownership in another business. It was truly the best opportunity, and somebody who I knew cared and loved me and cared about my long-term future. And conversely, it may sound conceited, I don't think he ever would have gotten the quality of a person that he got at the price. If you think about me working for Microsoft and to get me to come and take over this small business in St. Louis. So it really was a win-win, and I think we were right. I think it worked out. So it was an absolute win-win. I think that was the bottom line, the best thing. And obviously, I could go on about our relationship, which we have. That's just a great relationship. It's only grown stronger. We had lunch almost every day and have political conversations and philosophical conversations, and they've just been a blast. Now you said the worst thing.
Just well, the most challenging thing.
Yeah, I think the most challenging. I'll have to think. Maybe you could. I'll think about it while you give your answers.
Okay, yeah, for sure. The most challenging is when Tom and I have a difference of opinion about an investment or a person who we're working with or a client. And in the beginning, we had a couple of situations where I loved a certain stock. And I said, man, we got to buy this. Tom goes, I'm not sure there's this problem and that problem. And so we didn't buy it. And then it went way up. So we had to decide that if one of us really loved it and really believed in it, you got to have confidence in the other person. If the other person hated it, then we wouldn't buy it. But usually it's someone loved it and the other thought it was okay. And so that is a challenge.
Right, because if we wanted everything to be by full consensus, we said that everything would be a B. We'd be like, I think it's good, and I think it's good, but it would never be. We'd rather have something, half the things we own I love and he's good with, and then the other half he loves and I'm good with, as opposed to everything we're just sort of like, it's a little better than average.
Right. If you waited till we both loved the stock and pounded our fist on the table at the same time, maybe during the year we could buy 2 or 3 stocks, which wouldn't cut it. So I think that is the biggest difficulty. And occasionally, you have some employees that for one reason or the other may be nice people and very good, but don't fit in, and he and I may have different opinions about what to do about it. But we eventually
David's a little kinder and more
if I have a weakness
lenient.
in business, I'm too nice and don't take tough corrective action fast enough. The other good thing though is that Tom brings new ideas, and I was always impressed that he was always reading books on management and investments, and brought in a lot of new ideas and ways of looking at things. And it's fun intellectually to talk about that. So we've tried to get better and better at the art of managing money, and I really like that what I love that Tom also loves, and he has certain angles that he looks at more than I do that I think are really good, that added to our approach of success and also makes it more fun.
Yeah, I definitely think one thing, just knowing Tom very briefly, and what he does is, I talk to a lot of finance guys, and they definitely don't take the education as serious. They're not as open-minded, because like, we'll talk about just crypto real fast, but like, at least if you're in the finance industry, you should probably know something about it and not just fully dismiss it. You should take some time to research it. I mean, whether it's good or bad, who knows, but that's your job. You're representing people's money. You should know, what this is at least. And I know back where I'm in Ohio, not a lot of people in that area even like researching. If you're investing my money, I want you to at least know what it is. I don't want to have to research stuff if you're doing. So I think that's, just a rose to you. I think being able to educate yourself and not be closed-minded to things is a really good thing.
I totally agree. And that's actually one of the lessons you've taught me. Always keep an open mind to things. Even industries that you say are bad get good. Something new can come out and sound like total baloney, and we'll see whether crypto is a Ponzi scheme like you think, or a new future global
That's one of the
currency. Like
few issues that Tom and I have had some heated disputes, talking about every aspect, and he's telling me why it's all the advantages to it, and it could be a way of dealing with currencies in the future. And I'm thinking, I'm old-fashioned, but I've made mistakes. I've been skeptical. I thought cell phones were a passing fancy. You know.
But to Ben's point, the important thing is that to keep an open mind and to really look into it.
Yeah.
Amazon was another example of a company that we dismissed.
Yeah,
and
I
said,
said they're never going to make
they're
it.
never going to make it. They've never earned a GAAP profit, and now it's one of our largest. It has been one of our largest holdings for a long time. So you have to really look into it, and that goes for anything, crypto included.
Oh yeah, I mean, if a roofing product comes out, I'm going to learn about it, so that way I
That's
can
right.
tell the customer like it's good or bad or what my opinion is at least, you know. So I think being at least involving yourself in it, you know, that's a really good thing. So, well,
Well, thanks a lot. It's been a very interesting discussion.
yes, thank you guys for coming on. So, I mean, maybe we'll have you on again in a couple years. You never know. We're still going strong.